What's going on, family? How are you? How are you? How are you? Welcome into our stock sermon Sunday, per usual. Let me get myself up and upbeat. All right. It is late for some, 7:15 Eastern Standard Time, 6:15 Central Standard Time. And on the West Coast here, it is roughly around close to 4:15 or so. So I want to go ahead and get us started. Welcome everybody in. I always give a little bit of a buffer just to make sure everyone kind of rolls on in. They don't miss the beginning stages. And a lot of times it's what's going on, Marlon. A lot of times people are on the move. It's Sunday. They're having dinner with family. I get the time, but there's never a perfect time. If I did it in the morning, people are like, Brian, I'll sleep in on the morning. If I did it in the afternoon, hey, I'm out and about. Like, it does not matter. So make time for what you deem important. So I'm here trying to do the best that I can via a time that works for everybody. And also, who wants to do it too late anyways? I know some of y'all are late night owls, but you want to go ahead and get your sleep, get rested for the week. And let's get into it. All right. So my name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I also am a trader as well. Obviously, this YouTube channel here, but just know that this is not all I do. This is something that a lot of people are asking for me to kind of come on and teach, right? Like, hey, I learn better from your teaching style, or, you just say it better. I don't know, right? I just said, hey, okay, y'all want me to, explain how I'm doing it and give you a simplistic way of looking at trading and also long-term investing, really teaching the terminology I think is misconstrued, right? That a lot of folks will look at trading as a gamble or look at trading as, a very high risk skill set. But they also confuse the long-term investing piece. It's like, hey, I don't trade, but I have a 401k and I have, this amount in savings, or I have this amount just invested via my job, right? This is for everybody, right? You can use the charts and these stock sermon Sundays to improve your long-term investing, which is what we're going to talk about today. As you see, the title is called How to Know When to Buy and How to Know When to Sell. And I'm going to put quotes around sell simply because you may be holding some of these share positions for a while. Some of you have Palantir underneath, $30, $20, things like that, underneath $50, right? And it is quadrupled, right? And you're trying to figure out, well, what do I do? Do I hold? What if it drops? Like, this is a time where individuals are wondering, like, what is my strategy, right? And then how do you know what to buy and when to buy those stocks and shares, right? So I'm going to go over that a little bit today. It's going to be more of a teaching stock sermon Sunday because nothing's really changed. I think the market's just consolidating, trying to decide, hey, do we have a little bit higher to go, which we'll talk about today? And then what if, where's the top? Like, it just keeps going higher and higher and higher, right? How do I know when that profit taking is coming? Or I missed out on the move and I'm like, man, when can I get back in? Like, Apple just took off without me if I didn't have a position that I wanted, or Amazon, bounced at a higher level. We got some things that are still consolidating at lows. So without further ado, let's jump into it. As always, my time is valuable. So I appreciate those that would pay attention. Get your charts up and ready, get your notebook ready. And I'm going to go ahead and start with kind of the long-term things. We're going to give a brief update about what to do for the week, but I want to focus on those long-term pieces that a lot of people are, they got kids going back to school, they're busy during the fall, so on and so forth. All right. So we're going to talk about trading, long-term investing. All right. That's enough of me yapping. I get sometimes the intros are very, a little bit too long, but I'm trying to fill space as people like roll in here. All right. Thank you all so much. If you give me a like, a subscribe. A lot of you are watching the videos, but you're not yet subscribed. That would highly, be effective. I also learned that there's like 98% of my men, okay? Like 99% of men on here. So I want to shout out my women, or if you've got wives or partners, that is like, who are you watching on this YouTube thing, right? Bring your wives, bring your partners in, get our females active in the markets as well. All right. So thank you all so much. And without further ado, let's jump into our Stock Sermon Sunday. All right. As always, here we go for our Leverage University. A lot of people ask, what do I do after I watch these videos? I'm going to go ahead and say it here. This is how I'm able to show up, right? I could just be trading on my own. I don't have to give back to nobody. I don't have to share any of my trades. I don't have to share my ideas. I don't have to even show up here on Sunday. I'm not getting paid to show up here on Sunday. It's truly, I want to be here to, get this knowledge out of my mind so it doesn't consume me and then put it out into the world. So if you could do me a favor and say, hey, if anyone wants to learn, if you want to come in here for a 3-day trial, the link's down below. It's a community where we live trade. We also have our life coaching, our entrepreneurial advice, community members that are full-time entrepreneurs, people that have full-time jobs. How are you doing? How are you trading when you have a job? People that have kids, right? All kinds of individuals, high-level professionals. This is a high-level professional group, right? So if you're that person, I know my average audience, I've looked at the statistics and the analytics, are between the ages of 30, early 30s, upwards into their mid to late 50s. Okay. We do have some people that are in their 60s, but it's right in that middle. So I know a lot of y'all are busy. You got stable jobs, you got stable businesses, you got other things going on, and you're wondering, how do I do this in the mix of that? So I understand you, and I'm that person as well. All right. So Leverage University is where we have all our information, and long-term, right? In the trading floor, long-term day trades, swing trades, right? Safer things that you can do. And also shout out to our crypto chat as well. I got to pull this up. All right. Let's talk about ETH for a second. How many people bought some ETH when I posted it here in the community on 4/6/2025? ETH hit a dip buy level of 1,700. It also hit roughly into the 1,500s. And I thought it was going to touch closer to 1,000, but it hit right at that $1,500 to $1,600 level, which we marked on the charts. If you can see here, I posted this on April 6th. And where was ETH? Right at $1,500. So if you already had some ETH or you're in the crypto space, you're doing very well. But ETH has been absolutely just skyrocketing here. We got some people that had some eyeballs, they were watching. Hopefully some people picked it up, right? And then here is our ETH chart now. If you can see the Fibonacci levels that were marked off, right? See that green pop right at that level, touch right at 1,400 and some change. And then now is close to $4,300, trying to hit that $5,000 level by the end of the year or into 2026. So awesome job for anyone who bought ETH underneath $2,000. All right, cool. So for the weekly review, economic calendar, we got a busy week this week. We got CPI and PPI. If you're not too familiar with CPI and PPI, those are our inflation data reports, our consumer price index, CPI, and our producer price index, PPI, i.e. our consumers, how's our inflation rate doing? And then how are the producers, the businesses, the logistics companies, how are their prices doing as far as, the big conglomerate company idea? All right. So I like to just try to explain things in layman's terms as much as possible. So if I have any people who are like, that's not the word for that, just know I'm trying to tailor to the beginner. Okay. Whenever I speak on these public platforms. All right. So we got CPI and we got PPI. Okay. Keep it as simple as that. All that means is, with that data coming out before the market opened on Tuesday, coming out before the market on Thursday, and we got some Fed speakers in between on Wednesday, retail sales on Friday, and some other business inventory reports, and then we got consumer sentiment. All right. So all this being said, it's going to be a very volatile week. That simply means that please be careful. I always say this, of traps, because you can trade the trend. I'm more specifically talking to my traders, okay? People that get in and out of trades within the day, the week, your options trading, your futures trading, you're doing equity trading, right? Just be very mindful. It's going to be a very volatile week. That essentially means take your profits, right? Leave a runner, keep your stop losses tight. All those things are going to be happening this week. But also on a positive note, right, this week can also be volatile for some big moves, big money moves. All right. We're pushing up into resistance. You'll see in a second on the charts. And I want to be mindful of that. Do we break above 640 on SPY and keep going into new all-time highs? Or is that a double top trap for bulls into those highs? Okay. We had a big bullish week on our first official week of August last week, which was not surprising, but as much as some of those stocks moved, it was shocking. I mean, it was shocking, to be honest with you. I mean, a lot of news coming out with obviously Apple, Trump, and that thing going on. Apple coming out with their new products in the fall, so it was due. All right, let's look at the earnings report for this week. So everyone good on the economic data? Volatile week. Anytime that news and data comes out, you want to make sure that you are privy to the news and data to trade after the data. For my long-term investors, while I'm pulling up this earnings, anyone that's like, hey, Brian, what about my long-term portfolio? What do you suggest? Obviously not financial advice if you got a financial advisor, or you seek advice from maybe like myself or anyone that is in this space. All we're saying is if you're up over 100%, okay? If you're up over 100% from your positions, that means your apples, whatever it might be. I'm just saying for me personally, anytime I'm up over 100% on shares slash equity in a short amount of time, I start to get a game plan of, do I trim 10% off the top just to lock it in? Or am I comfortable with it pulling back 30, 40% on my position, right? So if I'm up 100% and I'm cool with it coming back down to 70, right? And maybe I can pick up a little bit more. It will raise my average cost, but I can pick a little bit more on the dip and keep holding for the long term, right? So I can't give specifics because I don't have people's portfolios and I'm not here to financially advise you, okay? But I'm just suggesting that you look at the positions that you're in and say, that's a long-term position I'm holding for the next 5 years. Or is it, I'm up so much, do I trim, if I've got $1,000 profit, do I take $100 off, right? $200 off, kind of lock it in, right? So I don't ever tell anyone long-term or suggest anyone long-term, hey, you need to, sell all your Palantir shares because you're up over 300%. Meanwhile, Palantir in the next 2-3 years could be $300+, right? Per share. So same thing with crypto, things like that. You just want to consider the volatility as you go back and forth, right? And just be able to manage your long-term as well, as a lot of people really just don't. They just set it and forget it, leave it, right? And then they look down and they panic sell for whatever reason, okay? The charts will help you with those as we get on the charts where you can see where pullbacks might be, okay? So this week we got Monday.com. They typically move pretty well. So that means that they'll report tomorrow morning, may look at that for a trading opportunity, but not really interested personally. I want to stick to my Magnificent Seven or top tech stocks, semiconductors, and any hot stocks that have been moving right now, which is onto our next point here on Monday afternoon, Archer. Okay. We talked about Archer and also Joby. They're in the aviation space. We talked about those. If you have shares in those, congratulations. I posted that in our Discord. Right. Trying to take, sometimes people, they look and they're like, how does someone keep up with all this stuff? Right. How do you know when the next thing's going to pop? It just takes research. That's really it. It just takes an hour of my time to go through the chart, look at different companies, look at news headlines, and see that some of these companies are ready to go. Okay. So Joby is one of those that we posted inside. I don't want to scan throughout here, but just we posted inside of our shares in Leaps channel. Okay. So Joby is one of those, and also Archer as well, which has earnings tomorrow. So don't have any predictions on it. I'll look at the chart briefly, but Archer is one that you may just want to take a look at. Aklo is another one, AKLO. Okay. Aklo, Archer, maybe just taking a look at it, what it does. Okay. On Tuesday morning, we got Circle. Okay, that was a major mover here in 2025 over the recent months. So I just want to pay attention to what it does, as well as CoreWeave, right? A lot of money has been made on CoreWeave and shares, right? Personally, I was not a part of it. I've been trying to wait for it to pull back and see where it is. It's in a nice buy zone right now, so we may want to pay attention to CoreWeave of what it does. It has pulled back from its all-time highs. Rigetti, okay, again, same type of situation, similar to Archer, Rigetti, right, in the quantum computing space, okay? That's very similar to my Ionic play that I had in 2024, buying Ionic underneath $7, okay? And it went to $50+. RGTI is another one that you may want to take a look at for your long-term or potential plays that are inexpensive enough to maybe double up, triple up, quadruple up with shares. Okay. So all of these are more so share positions, right? Things that you can buy at a decent price, hold, right? Kind of those Palantir type of moves, hood type of moves. They can move very drastically in the next couple of years. C, kind of taking an eye on that as well. Same type of situation. All right. Kava, right? Just absolutely monster move on Kava. When we talked about it underneath $30 in 2023, Kava has pulled back as well. Want to pay attention to that. I know it's in a different sector, different space, obviously in the consumer space, restaurants, things like that, which are very volatile, but people spend their money, right? People still eat out. Let's see. Anything here? If anyone wants to put anything in the chat that you see, you're more than welcome to. I'm just going based off of my own knowledge. Advanced Auto Parts was interesting. Okay. This one was one that absolutely, let me just show the chart really quick so I don't forget. AAP. Okay. This was one right here that at all-time highs was $223, and it pulled back to $30, right back to the level in 2008, 2009. I'm not saying that it's going to go all the way back to all-time highs. Who knows? But it did pop off of that level. Okay. It went from $30 back to $60. That is a double up in shares. So a lot of these companies, not sure they're going to be around. Obviously, with Advanced Auto Parts, there's O'Reilly, which went crazy. There's Amazon now. There's Walmart that people will be buying from. How much longer is Advanced Auto Parts, unless someone buys them, going to actually last? So I'm not considering it, but it is one of those that you can have a short-term play on, which was from $30 a share to $60 a share. And that's just equity, 100% in 2 months on shares. All right. Where are we? Let's see. Canon, Applied Materials, AMAT. That's another one that could make some moves. So AMAT. All right. Nice bull flag here coming off of it. There we go. Let's see, turn my trend lines blue. And it would look something like that. So AMAT coming off this $153 level. Nice bull flag, nice trend line coming off of there. Yeah. So beautiful trend line bounce there. Beautiful chart on AMAT, Applied Materials. So we know where it's possibly headed if it stays above this 170 level and probably going to 200 and then back to all-time highs at 250 plus. Beautiful chart, bull flag, breakout back above this 175, 170 level. Okay, so just something to pay attention to, keep your eye on. There's so many stocks to look at. There's so many things but when you see the chart that looks really, really good, you start estimating the risk to reward on it, and you start looking at it from a share position and also from a potential options trade position. So if I take it from 175 back to 200, that's a $30 move in equity or shares rotating back up. And it's also pretty big move, decently, if you have a lot of money that you can put into it, right? From here back to potentially something like this. All right. So that's where the chart helps you as a long-term investor. Why I wanted to kind of touch on that really quick is because a lot of folks see these charts and they just look at it from a trading perspective and just say, keep buying the dip, keep buying the dip, keep buying the dip, keep buying the dip, right? But when you look at AAP, right? When someone said, buy the dip at 133, keep buying the dip, keep buying the dip, keep buying the dip, keep buying the dip. And then they get into capitulation mode or panic mode and they just sell at the bottom, right? Same thing with Lululemon, which we'll talk about on all of these stocks that are taking a nosedive that may be some buy opportunities. And this goes into answering our question of when to buy, when to sell, okay? And that's where the charts come in. So I'm looking at these higher time frames for longer term investments. And first asking the question, on a long-term play, what is the company and is it sustainable in the long term, or is it maybe a potential high risk and who knows, right? So what is the company is my first question. So if I look at this chart and I'm like, man, if this was a tech stock, right? If this was looking like NVIDIA or any type of solid company, tech stock, AI, people will be essentially just buying this dip right back up, right? But since it's Lululemon, yes, their stores are still packed. Yes, people are still buying it, primarily women. However, it is still relevant, okay? So when I have a relevant stock that is dipping like this, but it's in a different sector that I'm like, maybe a little bit more cautious. I'm a little bit more patient with things like this, right? It got below that psych level of 200, but if I look to my left, what happened last time Lululemon got to around this 175, 180 level, okay? Look right here. Buyer stepped in right at 165, 170. took it back up to 190. Look at this big dip buy here, came down, quickly got bought back up around in this zone. Okay, so I want to see some bottom wicks kind of start coming in, but this is when you start getting interested because you see and looking to the left on a monthly time frame. Okay, that is when I typically look at long-term share positions, monthlies and weeklies. Okay, so for my long-term investors to kind of touch on you, because since everyone always talks about trading, long-term, this is how you look at a long-term play. Okay. You analyze what's the company, is it relevant? Can it have a potential to rotate back up? Yes, Lululemon does. How far? We don't know until it starts giving us some clues. Okay. Second, I look at the chart and I can see what happened last time it was at that level. 189, it's approaching 180. It bounced and went all the way back up to $300. Okay. And then continued another higher low, went back up to damn near 500. Okay. Which it did eventually. So it's getting typically solid companies repeat patterns. Okay. So that's the second clue, is looking at the buyer level and simply support and resistance on the charts. Okay. The third is I start using indicators. Okay. So I start looking at the RSI, the relative strength index, and I'm seeing if it's approaching a buy level or a dip level between 30 to 40 on an RSI monthly or weekly. Okay. You can see how it matches up with the chart. Look what happened last time. The RSI was at 40. Look at the chart. It got bought back up, went from $50 to almost $200. Okay. On the RSI on a monthly. On a weekly, last time it got to this level, what did it do on the chart? There's the RSI underneath 30, kind of in that overbought caution area. Buyers stepped in on the chart right around 230 and rode it up that was August 2024 into the holiday time and the new year, right? And it's back at 400. So it went from 230 to 400 in a matter of 3 months, in a matter of a quarter, which holiday season's coming up. Buyers might be stepping in for the holidays. We know folks spend money out of nowhere on $100 leggings, active wear, things of that nature towards the holiday time to get their fits right for the new year. Okay. So this is one that I'm already kind of jumping into my role of it, but this is one that I'm paying very close attention to on these overbought levels. So in summary on Lululemon, what do you do after those three things? It's a solid company. It has potential. They have cash. They have money. There are consumers that are still buying their product. Cool. I may want to consider it for a buy level. If it's in a specific sector, then I'm going to be a little bit more aggressive on the buying or a little bit more patient on the buying, depending on the sector. We saw how quickly NVIDIA got bought back up at $86, right? Because of the sector it's in and people were picking up AI, things of that nature. Second, I start looking at the support resistance on a monthly and a weekly and a daily, those three time frames. And I'm starting to see that it is ready to go if I start seeing an overbought level on a daily or a weekly, more specifically a weekly. And I start getting what we call a position. So do I have Lululemon yet? No, but this week into next week, you want to start maybe considering Lululemon if it's in your price range, if you want to consider it, if you have this consideration that it has the possibility of recovering, right? Which it will. In my opinion, Lululemon, first, we got to get back to this level right here, which would be 200. And then the next stop would be roughly 240. Okay. So Lululemon from 200 to 240, right there is the first move. Okay. It will probably make a little retracement off of there like that. And then it will continue. If buying steps in above 240 and then break above 250, it's going to start squeezing like that. Right? That is the type of move that you typically want to look for. Okay. If for any of my formations or chart folks, technical analysis individuals, if you're looking at this looks more like a falling wedge. So all we need is a break out of this wedge, something like that, right? And then we can get a pullback and then go. Or you can start a position as low as possible, consider to keep adding lower and then just wait and be patient. Okay. I think Lululemon personally is a great buy underneath $200. So just consider it. Do your own due diligence, but that is how the move would look with a gap above. And this might take time, but personally, I think by the holidays, New Year, or into next summer, Lululemon will be back over $300. All right. Cool. So there's one long-term investing opportunity. Yep. If you're up, there's Marlon right there. If you're up 100% on Joby or Oklo, what would you trim off? Not financial advice. Appreciate you, Marlon. Let me pull up that really quick. If y'all have any questions, you're more than welcome. And I always give my answers based off of technical analysis. Okay. And then you make your decision off of those, because it can go higher, right, on Oklo. But what I'm seeing is some top wick action right here. So if, just say Marlon, not financial advice, but you can read into it. If Marlon's up over 100% on Oklo, that means his average cost is underneath $40, right? Average cost in the low 30s, something like that. Okay. So Marlon could try to hold for $100+ on Oklo. Okay. Or he can consider trimming a little bit and picking up more around $60 if it holds $60. Okay. Because what I'm seeing is some top wicks with higher lows. And that would technically be the stop loss that I would be looking for if Oklo somehow came back below $60. Other than that, I think it's a beautiful chart. This is just a pullback where it pulled back $10 from 85 back to 75, right? That is not a panic sell opportunity. It's just something like, okay, where is my breaking point? All right. Because obviously he does not want it to come all the way back down to $30 and give back his 100% gains on his shares. All right. So what you do in this situation, or what I would consider, all right, is that Oklo has the opportunity to pull back to $60 first. Okay. It would look something like this. Like that. Oops, red. Okay. So does everyone understand this? You would not like for it to, and if you're trying to protect your capital and your position, you would not want it to start doing something like that and fill in those gaps. See those light gray areas, right? Unless you're like, man, I didn't get enough. And you're like, cool, pull all the way back to $30. I miss how much I wanted to add. Give me more. Does that help a little bit, Marlon, of like how to consider this? Is you don't want to panic sell because it could bounce and go to 100 from here, but also you want to have a stop loss, area on saying, cool, am I willing for it to pull back to 60, 70%? And then I consider there, cool, let me take a little bit off, right? So I like to move in 10% to answer your question. So if I'm over 100%, I go ahead and trim 10% off the top. That's just me. If it pulls back a little bit more, I'm like, let me trim a little, maybe another 5%. Okay. Just to take some off the top. And then there's a level where I do not want it to go below, right? I'll hold it as long as it stays above $60, because that is your, essentially 100%, right? Does that help, Marlon, a little bit? Answering it with a non-financial advice perspective, so you know how to think about it, and you can see it on the chart. Right. Same situation kind of with, AAP, for example. Okay. Not saying it's an AAP situation, but this is where people ask questions. Hey, I bought Advanced Auto Parts 10 years ago at $40. I don't know if they had a stock split or not. And it's at 200. What do I do? I'm not selling. I'm not selling. I'm not selling. I'm not selling. Okay, cool. You're back to $30. You see why it's important, even on long-term positions, that the charts will help you, that you did not really want Advanced Auto Parts to get back below 165, right? You wanted it to come here and then bounce and go higher. See how that's supposed to look? Higher low bounce, higher low double bottom bounce, goes up to new highs, wanted to hold these previous highs of 175 and 165, and then bounce from there and go higher. But you see that trend broke and it went all the way back down to the lows. Does that help? Perfect. Exactly. Exactly. Thoughts on MU? Yeah, I got you. MU was a great one last week that we talked about. We'll talk on MU. Give me a 5 in the chat for those that are like, man, the charts are helping me long term. Are you seeing how the charts can help you with your long-term portfolios, your savings for your kids, your 401k retirements, your just investing account that you may have gotten started with? You don't have to use the charts just for trading. Does everyone see that? Can I get a 5 in the chat? Does everyone see that? For my advanced folks, right? Are you getting a reminder? For my advanced folks that have been investing and trading for a while and you're like, Brian, I've been doing fine, but maybe you never looked at a chart for your long-term portfolio, right? Does that help? Does that show you how people know when you see YouTube thumbnail that says buy this now and you're like, man, I don't know what you're talking about. If they're a technical trader or a technical investor, they're using the charts and they're like, look what happened last time. Advanced Auto Parts got above $70. It took off above 70 to 100 and then to 175 and then to 200. But now this is resistance until it breaks above. Break below, resistance, resistance until it gets back above. The charts will help you on any type of stock. Now you still have to do your fundamentals, right, Marlon, that you said. You still have to do your fundamental analysis. Is this company worth it? Right? So the technicals are just one piece. The chart is just one piece. The rest is this company useful? Are they growing? Are they profitable? Are they having some acquisitions? Are they coming up with new ideas? Do they have a new CEO, CFO? Are they changing their leadership? And that goes further into your research, right? That's how you can become more of your owner of your portfolio versus, hey, some of my friends said buy this. All right. So now you can manage it better, Marlon. I'm glad. All right. Let me jump into MU because that was another question that was asked, and we'll keep going on some of the long-term plays. And then I'll go into the weekly opportunities. So again, the chart's beautiful on MU. You can see here that last time MU, okay, let me go here. So I'm on a monthly time frame. Each candlestick represents a month. I'm reading the chart from right to left. Okay. Goes up. People take their profits at all-time highs, pulls all the way back to $60. Okay. So Brian, well, how do you know how far it's going to drop? You don't necessarily. You just have to pay attention and mark each level where buyers are present. Okay. So on MU, how you know where buyers are present? Where you see a big change in direction on a higher time frame. Monthly and a weekly. Buyers stepped in right at 65 to 70, went up to 100. Okay. Buyers also stepped in where there was a big move right here at 80. You can see 80, 80 bounced. And then right here, again, got above 80, went up to 130. Okay. Here's some buyers right here as well. Stepped in, held, big move off of there. So again, that 65 level. So do you see here when MU was pulling back towards the April timeframe, people were like, yo, what is going on with MU? It was at $150 and now it's at 60, right? Each level you have to consider, does that level hold? So as it was pulling back, guess what held? Buyers stepped in right there last time at $80, went back up to 114. People didn't take their profits, pulled all the way back to 60. So again, another buyer area and then a bigger dip buy back to 130. Guess what it's doing now? Same thing. Pull back to buyer area, pull back to buyer area, pull back to buyer area, going back to resistance again. So where is MU headed? MU is headed towards 130. Stop one, right? Because that's what it did last time. Went up to this 125, 130 area right there. So that is now resistance until it's broken. So that's one of the targets that MU is going to. So to answer your question, Harlem, where do you want to buy MU? Or the question is like, can you take a look at MU? So that's a common way that people ask questions. And I always, as a teacher, as a coach, I'm going to say, Harlem, how should I ask the question, Dr. B? When you ask a question about a stock, here's how you want to pose it to yourself. Hey, where do I buy MU? Hey, I have 100 shares of MU. Where should I consider taking profit, or where is it going? How much more should I hold? The charts will answer those questions for you, because when someone says, hey, can you take a look at MU? What are you asking? Where to sell it? Where to buy it? Where's a great place to buy? What is it doing? What do I do with it? You see how, trying to ask a better question to yourself. So Harlem, if you've been here before, you already know how I am. If this is your first time, like, man, this dude going in on me. It's like, no, I'm really I want people to improve what they're asking, right? That's how you get better answers. Hey, Brian, can you take a look at MU? I have 100 shares, or I have shares of it, and my average cost is below $100. Oh, okay, cool. I can answer that question better. Or, hey, Brian, I'm looking to trade MU this week, right? Should I take puts or calls? See the difference? I don't know how to answer the question a lot of times when people ask, hey, can you take a look at this? What are you trying to do with it? I don't know how to answer the question. See what I'm saying? Yep. Cool. Appreciate you, man. Appreciate you. All right. So MU, here's how I answer it for long-term folks. Long-term buy areas are between above $100, right? So if you can get MU for shares anywhere between 100 and a 110 pullback, right? 100 to 110 pullback, maybe even 115, you're good to go. As you can see, it's already another bull flag off of here. See how that trend broke right there? It was downtrend, 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 trend broke. So it's on the move already, like we talked about last week, headed to 130, right? So you got between 115 to 130 to decide what you want to do on it, okay? But I'm not a big fan of chasing. So if it breaks above 120, you've got to 124, 125. So it has the possibility, if you're trading it, to consolidate right here, a little bit of a flag. And if it breaks above 120 and you're looking to trade it, you got about $3 to $4, all right, to make the next move. It will look like that. Because if I look to my left, I have to respect, you have to respect these resistances. All right. Brian, is going to 120. You said it's going to 130. Yeah, but it can also pull all the way back here like that and then go to 130. Right? So I always like to buy the dip, if possible, on where buyers are sitting. So I want to have a plan if MU pulls back to 110, right? Maybe it goes to 125, pulls all the way back to 110, then rotates back up. Okay, that's what I would love to happen, right? So here's your area. If you're looking at the chart, Harlem, right there, right there, that 115 area. Previous resistance broke above. If you can get pulled back to 115, 116, that would be where you would enter on a short buy position. So whether that be shares, calls, 115 to take it up to 125. Does that help right there? If it breaks above 120, you got a little push that you can chase with calls back up, right? I would not touch puts on this. Now, when it gets to 130, something like that, I may want to consider, if it pushes all the way up here, that's heavy resistance. I could do puts for trading, options trading, back down like that, okay? And then have a stop loss above 130. But MU is looking really, really good. If it breaks above 130, I mean, you have something like that. So yeah, I would say anywhere around $100, as long as MU holds 100, good to go on shares, good to go on maybe longer term call options if you're looking at this like that. See that? So I've got my buy areas just in case something crazy happens and it drops, right? So if someone said where to buy MU, I would say 80 to 90 bucks, around 100, right? And then if it somehow pulls back to 70, want to be prepared for that. Cool. Hopefully that helps. Perfect. I think there's a rotation. Yeah, I'll answer Ben's question. Let's look at Ethereum. Let's go to crypto. Go to my crypto list and go to Ethereum. So same thing with Ethereum. Do you see how I marked out? Right. I shared that at the beginning of the live stream is that we had this Fibonacci level marked out on Ethereum. So if you picked up any Ethereum, I don't care if it was 10 bucks worth, 20 bucks worth, or $10,000+ worth, right? Ethereum, or you've been holding for a while. Ethereum underneath $2,000, you have doubled up your money. Do I think it can break out above Bitcoin? Yeah, I personally do. It's at a growth rate right now, a little bit more rapid than Bitcoin. All right. At least in the short term, it went from $3,000 to $4,000. Right here, that's a 40% move in 1 week. 40% move in 1 week. Right. So you can visually see the rotation because Bitcoin still moving nicely. Right. It's like the savings account, right? Still bull flagging, still doing what it's doing. Previous highs, bounce right there at 112, broke out. There we go. Rotating back up 123, probably going to 130. So yeah, I do think that Ethereum is picking up. Bitcoin is just continuously on this little bullish train. And any little dip that you can get on Bitcoin, it might not be much, but yeah, 130, maybe 150 is in sight by the end of the year. We'll see. Sol, same thing on the chart. See, the chart helps you out. It's not yet rotated all the way back up to 200 plus. So Sol is curling back up with a target of 200. If it breaks above 200, we've got, something on our hands, a full rotation all the way back to $300 plus into the fall timeframe. It would look something like that. Okay. Now let's go into speaking of crypto, let's continue on with that long-term play train. So I touched on Lululemon. I've got a couple more for you, but since we're on crypto, let's look at Coinbase and Connell. Okay. They're the same thing. Connell is the leveraged ETF version. So essentially in layman's terms, the cheaper version ETF, do you see it's $30, $33. At the highs, Connell was just at 70. So this is how someone can participate if they know what they're doing. And also they have a chart up, they can participate in some of these bigger stocks without having to spend $300 on Coinbase. It's the same chart. Right? Same chart where I can see buyers and sellers. Okay. So Coinbase has a nice support right here. If I go all the way to my left, previous resistance turned into support where buyers stepped in right at $300. And at the IPO held up 300 and went back to 429. Okay. So guess where it pulled back to? Why you don't chase the highs? Right back to a buyer area to go higher. Right? See that wick? For those that are not familiar with the candlesticks yet, there is a video on my channel called How to Read a Stock Chart, right? The candlesticks tell us where buyers are stepping in. I don't care the color of the candle, all right? Well, Brian, that's a green candle. Look at the wick. That tells us price action. This was once a solid green candle and got sold off, right, from 444 all the way back down to 380. Okay. So then guess what continued the next month? More selling back down into a buyer zone. So it can rotate back up and go right back to 400. And there's a gap. So it would start looking like that. Okay. You see the change in direction. There's a little hammer candle off of here. All right. Hammer candle, buyers right there. And then you have a breakout. Right there on this candle. I'm just gonna move this line. Breakout to there, pull back, and now we still got more buyers that are holding up that level. So that's 3 days of looking at, okay, Coinbase is holding up this $300 level pretty well. It's protecting it pretty well, and buyers are stepping back in because it could not take it lower. All right. So I want to pay attention to Coinbase this week. If it breaks above this 317, it's going to go directly to 340 and then start getting into this gap fill most likely. Okay. It's not going to have a big candle like that most likely, but it would do something like this potentially: break up, pull back, break up, pull back, break up, and then you'll start having something like that. So that being said, Coinbase is another opportunity this week if you are a bigger player to look at Coinbase rotating back most likely to 350 in the short term. Okay, 340 to 350. Do I think this gap's going to get filled by the end of the year? I personally do, but we got to confirm level to level first before we start talking about big squeeze back up into 400. But 300 is holding. You can get 320 to 330 to 350 as the first target. Everybody good on Coinbase? Now let's go to Connell, which correlates the same way. Do you see it's the same chart? So Connell, just say someone had 100 shares of Connell at $30. Okay. 100 shares, 30 times 100. That's $3,000 worth. Okay. You got 100 shares in. Okay. And you take it back to the middle of the gap fill, same thing. Right. You take it back to $30, $40. Okay. So now you have just essentially, what is that? 20%, 25%. Yep. So now you have what, $4,500? So you just made $1,500 just on shares. Right. Now, if Coinbase by the end of the year goes all the way back up to 60, you just doubled up. Right. And that's what we call in the share world or equity world, you doubled up your money. You made 100% on your money on shares. So you don't always have to have options trades. That's why I wanted to cover this first, because I don't want people to get misconstrued like, Brian, man, that's too risky. What about the options trade in the short term? We'll get to that. You can also options trade. You can also do options with Connell, maybe taking the contract out to January, and you can buy shares. And also you can do contracts, right? But sometimes the shares, you might as well just buy shares, in my opinion, because it's a little bit safer because you own them. And also look at the cost of some of these options contracts that far out. It's like, okay, I get an $800 contract for Connell. I could just buy, 25, 30, 40, 50 shares, right? With less risk. But you can do both. So maybe Connell, September 19th, in a month, it can go back to 40, and I'm willing to spend $200. Maybe, maybe not. So that's how I decide sometimes, like, yeah, it's just better to buy the shares. It's just better to buy the shares. Safer, take it up to 50 through the gap fill. Don't have to think about time decay or anything. And I just went from $30 to $50 on my shares. Okay. Everybody good with that? That's another one that is in a buy area that if you have extra funds, or you're like, hey, I'm making 5% on this savings account. I have a lot in, but maybe I want to make, 20, 30% in the next 2-3 months, Brian, on my money. Keep your savings account, keep it rolling at 3-4%, whatever it is, right? And then maybe take 10% out of it. Just say you got $10,000. You pulled $1,000 out of the savings account, put $1,000 into Connell. So you still have your safety net, right? Which a lot of people are concerned about, but also you're making 20, 30% on that $1,000. And then you put it back in the savings account, right? So that's just a simple example of how to do that. I'm not telling people or suggesting to people, or someone shouldn't ever, to take all $10,000 out and then put it all in the market. It's like a lot of people aren't comfortable with that, right? So I try to make realistic examples for real people. Does that help? Can I get a 6 in the chat? Does that little suggestion help? So you make it practical, right? Cool. Yeah, exactly. There you go, Ben. 4% at Robinhood Savings. All right. So there's Connell and Coinbase. Let's look at UPS. It's another one that's at a buy area. Okay. buy area. Now, a lot of these things you're like, Brian, it's 80 bucks per share. I can't get 100 shares or whatever. I get it. Like, that's fine. You can do whatever you like with it. I'm just saying it's at a good opportunistic time. Okay. Look at these buyers that are sitting down here in this zone at 80 bucks, around 80. It's kind of the same thing that happened to NVIDIA. Now, again, people may have questions about UPS or whatever, but look at where NVIDIA pulled back to, right in that buy area. That's how people knew when to load up the boat, because there was heavy buyers at 90, heavy buyers at 85.90. And guess where it went? 85.90 up to 180. Double up on money, more than double up. Okay. So same thing is happening on UPS, where it is getting very interesting in this area. Now, UPS is a different, type of beast. Obviously, people have questions. The union was, but UPS and FedEx aren't going anywhere anytime soon. And it's worth looking at 80 to 90 bucks. Okay. Because you have the opportunity for UPS just to go back to 100. Okay. So back to 100 is step one. Right. Now, UPS starts breaking back above 100 solidly, and we start getting back above 110. That's where it starts to get interesting on UPS, because then this is a major bull flag and it starts rotating back up like that. Did I just not show you this on Ethereum? You see this buy area down here on Ethereum at 1500? Where did it rotate? Rotates all the way back up to the highs at 4,000 before you know it. So this is a type of chart that you want to get interested in, right? Now, when you're adding for shares more specifically, and I'll talk about leaps too. Just say someone's like, Brian, I don't want to own no UPS. I'd rather put my money in tech, right? I don't want to load up all my money in UPS and it starts snailing out and doesn't move, and I got my money stuck in UPS. Okay. Then I blame you, right? Remember, not financial advice here. So what I would suggest, if someone's like, I don't want to own any UPS shares, they could do a leap on UPS, a leap option. That essentially means that you go all the way out into 2027 or into the summer of 2026. Okay. And you look at an option contract that can make you money, but you're not buying, you don't have to buy thousands of dollars of shares of UPS where you'd rather put it in some tech company. Okay. You could buy an option contract for UPS for $500 at 105 calls for January 2027. We just looked at the chart and UPS was moving towards back to at least 100. That could happen in the next 2 months. That could happen in the next month. That could happen in the next 3 months, 6 months. But if you got a year on your option contract, then you got plenty of time for UPS to go back to $100 and you spent $500 on it. Well, Brian, how much is that going to be? If I spend $500 on a UPS call contract, maybe 105 calls, I can get it for $500 and I buy one. How much is that going to be? It's the question that everybody always has. Well, if I look at this chart, which is the options contract chart, I can give you an estimate of how much that would be. Do you see how the chart looks the same? If that gap starts filling on UPS and it's back at $100, you will turn $500 into roughly $1,200 pending theta decay. Okay. Now, for those who are like, what does all that mean? Just think about it simplistically until you get in Leverage University or you start understanding options a little bit more. Okay. You will turn $500 into $1,200 within whatever time frame in the next year. Will that also beat your savings account and you only spent $500? Right? Well, what if I do 3 contracts? Brian, what if it goes extremely past $100 in the next year? UPS. Well, then here's your chart right here. Here's how much it is right now. The contract, the 105 calls for January 2027 is $500 right here. Do you see it where it is now? Here's the chart. There's the gap. It looks the same. If it goes past 100, that contract goes to $1,800, $2,000, $3,000, $4,000. And then at the very highs up here, $2,000, $3,000, $3,600. And you spent $500. So you don't know how far until it breaks the levels and goes. But this is what happened with Apple last week. Apple went from 200 to 230 in like 3 days. Right? So that's where a lot of the money can be made safely on options contracts is you take the contract all the way out 6 months, 1 year out, because maybe you're like, I don't want to own UPS. It's going to take too much money, Brian. Right? If you spent $500 on UPS shares, you can do both. That's another question people have is, do I have to choose? No, you can own shares and you can also do maybe one options contract. Right? The shares are going to move at a slower rate, right? The option contract is going to give you that push. You can turn $500 into $1,200, but if you only spent $500 on shares and UPS goes to $100, well, that's just, what's that math? It's making sense. Is this good thus far? Give me a like, something in the chat. If this is good thus far. I feel like I'm teaching, as the preacher would say. I feel like I'm preaching. Okay, $500 divided by 86. That will give you 5 shares of UPS, right? So 5 shares of UPS, 5 times, just say, moves $20 or $15. You just made $75 on shares. On the options contract, you made $500, $600, $700. See how both can benefit? Options contracts expires, right? But I also own shares. So I can go back and buy more shares with the options that I made, the options profits. Just getting people intrigued. I'm trying. I heard they exposed to 39% Switzerland tariff. Yes. Rolexes are, if you don't know about Rolex investments, I'll share that in a little bit. I'm getting off track. But yes, Rolex is down right now, right? A lot of the date justs, a lot of the even the day dates, the Daytonas haven't really moved too much. If you're a watch person, you'll know what I'm talking about. But yeah, subs really nice right now. Submariners, those are sitting right. You can get some, especially the vintage ones, right? The 08s, the 2010s, right? Those are sitting pretty right now at about $9,000, $10,000. That's a $12,000, $13,000 watch in my opinion. So $8,000, $9,000, $10,000 for those subs. But yeah, some of the newer ones, like I told people, the Sky Dweller that I had that I sold for a profit, the Sky Dweller, it still got some time to prove. People were buying Sky Dwellers at $23,000. Now they're back at $17,000, $16,000. Sorry. There you go. For my watch folks. All right. Let's keep moving and grooving. Everybody good on UPS? Can I get a 6 in the chat? Everybody good on UPS? That I think it personally is at a buy zone. It could be at 90 very quickly and 100, in my opinion, within the next 3 months. Let's just say $100 within the next 3 months. Okay. Also, CEO just bought shares. I think $1 million worth of shares. So anytime big whale comes in, buy some shares, everybody's eyeballs on it. Okay. So UPS is another one. Let's go to a couple more and then I'll move to our main shares. Our main stocks that everyone's focused on for the week. Let me keep track of time. Okay, cool. We're right at about an hour. So about another 15, 20 minutes and I'll be out of your hair. Let's go to still a lot of healthcare that I still believe in. A lot of healthcare. It's going to take some time on healthcare. Novo giving some signals here of a hammer candle on a weekly. It bounced from $45. So you can see Novo Nordisk. People, it's going out of business. It's going out of business. No one's buying that. So on and so forth. I always remind folks I'm in the healthcare field. I'm not practicing obviously anymore, but the doctorate is real as a pharmacist. Okay, so Novo Nordisk not going anywhere. People are going to have diabetes. People need vaccines. It's going to be another situation. So healthcare bouncing. Novo going from $45. The next target is 60 on Novo Nordisk, 55 to 60. Okay. Once it gets there, we got to decide, does it break above or consolidate or what it does. But I think Novo Nordisk is at a buy zone, at least maybe to, $55, $60, $70. And then if it can get past there, then we got a lot of gap to fill on the upside, back to 90, back to 100. And it's on this little downtrend here. So it's got to break out of that trend a little bit more. And it kind of did right there. All right. Broke out, pulled back, and then held again. So Novo Nordisk there. CNC, I still own shares of CNC, which is Centene. It's another one here based out of St. Louis, where I went to pharmacy school. So Centene coming into that $25 level. I've got shares underneath 30. So 25 to 30 bucks. These are a good share buying opportunity. And the first target would be back to 40. Okay. That could take another year. That could be in the fall time, but it's coming into this like falling wedge situation here. And the moment that it breaks out of that, goes back to 30 really quick, starts curling, go back to 30, then right at 40 before you know it. Okay. Do y'all need an example for those that are new to this, what this looks like? Okay. Amazon. Right here, breaks down, starts forming a little consolidation, breaks out of there, and then takes off. Right back from 212 to 225 within a couple of days. Okay. And Amazon's going to 230. Okay. So you see how the formations help you as well, no matter what time frame it's on. So Amazon pushing down into a key support zone at 212, bounced at 212, went to 225. Same thing on Novo. It's just on a deeper time level. Okay. Starting to give some buyer signals. All right. HIMS. People have always questions about HIMS. It is at a zone. 50 bucks is a buyer zone. As you can see, bought at 50.51, went back up to 67. So this week, maybe paying attention to him, starting to get some buying as you're seeing the same formation right there. Consolidate, holding, starting to build off of that level right there on HIMS at 50 bucks. I got a target back to 60 and potentially back to $70 if HIMS starts picking up some steam off of this level. Same thing. It'll look just like that. Okay. So HIMS, here it is to the left, same thing, right back to 60 and then right back to 70. All right. So watch HIMS breaking above $54. HIMS gets above $54 this week. It's going to start breaking out very quickly and headed towards that $60 level. Okay. Now, do I think HIMS can come lower? Yes. Because I got another buy area down here, which I like even better. If HIMS pulls back and gives us another red month into the fall time frame and starts doing like that, then I like that buy area. Really, this one, like $38 to $40. Okay. Merck, whenever it's ready, it is at a key level almost to perfection. Whenever Merck wants to decide to take off, maybe healthcare takes off in the fall, Merck will be up to 90 before we know it. So if you got Merck shares, if you got Merck leaps, hold on for dear life. Okay. Because when this takes off, it takes off pretty quickly. Okay. So Merck, another one in the healthcare space. All right. Jeez. Oh. Let's keep rolling. Let's go back to tech. Let's do a SPY. Hopefully y'all like that little switch of doing long-term stuff first, because that's a lot of times what people have questions on instead of day trading. So I want to make sure I covered some of those things that you may consider buying, selling, and some of the people's questions. All right. So let's look over SPY. Hopefully you enjoyed last week's. If you were here last week on SPY, my full analysis of how to read into it. I'm not going to do that same thing again because we're running short on time here. But 640, okay? It's approaching that high level resistance. Same thing happened last time. Pushed up into that 640, big reject, back down to 630, dropped $10. Okay. So 640, we need to know what it's going to do at it. And that's why last week was tough inside of Leverage University, is because it was grinding back up into this level of resistance, right? And I was having my head on a swivel because every drop was so drastic that it got bought back up so drastically and just wanted to keep going. And then you have gaps, right? Remember when we talked about last Monday? I think it almost happened to perfection. Okay. When I told y'all last Monday that we would probably have a gap up and we would start filling this gap immediately. That's what happened in the morning on Monday. Okay. So I'm expecting the same thing this Monday, is that we continue higher, right, into CPI, which is Tuesday morning, and we decide what we want to do. Okay. CPI comes in great. We're breaking out above 640. Okay. If CPI says, inflation's a little hot, we don't like it, then we could drop pretty drastically back down here. Does that help everybody that is going from my beginning, talking about being mindful of the data, right? That's how you get trapped, is a person doesn't know what data comes in. If we break above 640, cool. CPI must be good. We're going higher. You can trade confidently on the upside, being mindful that we're breaking into all-time highs. We will still want to be careful of traps. Okay. If we reject that 640, come off aggressively, start getting back below that 635, then we'll have a head and shoulders. And we're pulling all the way back down in this gap like that, probably 631. And that's what makes this week pretty tough, because we don't know necessarily what's going to happen just yet. But you can know exactly where the buyers are and where confidently you can trade calls a little bit better. I want to consider calls closer to 631, 632, right? I want to consider what we do up here, that I don't really want to trade calls up into that 640 level until it breaks. Okay. Now, Brian, what if it doesn't pull all the way back down to 630? Well, you got a buy area right here of 638. Okay. 637 to 638. You see how it stepped in right there, bought back up off of that level? So that is now support. Support, support. And then if it struggles, it struggles, it struggles. There's that big breakdown all the way back down. Just look left, what happened. So right now it's holding. Right now it's holding. Still got a little resistance at 638. Kind of like right there. See what it did last time. Came back down, came back down, came back down. It's a little bit of resistance at 638. But anywhere up in this zone, I'm just a little bit cautious of. Kind of want to make that whole area red. Just a little cautious of what it does in that area until it breaks. All right. I understand the market's strong, but this is for my traders that get in and out of trades very quickly. Is that if you think it's just going to go bullish, be careful and confirm it above 640 first. Okay. QQQ, pretty strong here. Obviously with tech, obviously with Apple having a big week. I'm preparing that a lot of Apple holders and anyone pushing up into here do not want to hold their buy positions or their call positions into heavy data, right? So I like the QQQ chart because it's kind of giving me a wedge here, right? A bullish wedge that essentially means that it could break above 765, 765, 575. Promise I don't have dyslexia. 575, and then squeezing up into that 580 if we get extremely bullish. It would look something like that. Okay. So above 575, 576, there's a little bit of resistance, I believe, pre-market last time we got above there. If I look left on a 4-hour, yeah, you can kind of see it right there. 576 hit pre-market, immediately pulled all the way back to 565. So if it clears that level of 576 into 577, you've got 580 in sight. Okay. And then we'll reanalyze what it does at that psych level, right, of 580. All right. So extremely bullish. I'm not really interested in this squeeze upwards. I've told my group, and if you don't agree with it, that's cool. Or if you trade differently and you're comfortable with it, I don't trade very well at all-time highs because I don't have any levels to go off of. So I'd rather just let it go. Long-term shares, just let it go, just let it go. I don't trade very well trying to top, that it needs to pull back, and it just never does. It just little short pullbacks, stair steps is way up. So I leave those things alone a lot of times and just let it go until it does something, until it breaks a trend, right? Because the risk to reward, I don't really like. If it keeps grinding and grinding, I want it to do something like this. Okay, now I can trade it. Now I can get active, right? Give me the volatility back down like that, and I can trade it down. I can trade it back up, and then we grind back up, right? That makes sense for everybody, hopefully. So I'm not really interested in the indices, especially SPY and QQQ, of what they're doing, just grinding into that area, all right? Now, IWM's got some levels to go off of, and it's kind of lagging behind a little bit because of the last FOMC meeting, right? Right back here where IWM dropped from 225 back to 212. So not really, this consolidation right here in this area, interesting of what it does. It's either going to break out or break back down to 215. So IWM kind of interested in, but don't want to guess what it's going to do because right now it's holding 220, and it could rotate right back up to the highs if it wants to with positive CPI, and we're right back up like that. Okay. So we'll see what IWM does. I really want it to break out of this, kind of come lower, then I can snatch it back up. Kind of like this. I like that a lot better. But it might not give us that. There's still buyers in this 218, 220 area, right? Went back up to 226, went back up to 226, going back up to 226 potentially. So, we'll just watch IWM at 218 to 220. Got 223 as resistance. We'll see what it does. All right. Let's talk about Apple. I mean, I got shares in Apple, but this trade was just, for those of you that are not in Leverage University, I want you to see this. I really want you to see this. If some of y'all picked it up, congratulations. I missed my entry. It came out of nowhere. Here is our channel for swing trades. I have Apple calls. I want you to look exactly at this chart on August 1st. I think I even talked about it on this live. Look at this chart, not in yet, but watching this 200 to 201 level for upside back to 206, 208, 210. There's the chart on August 1st. I'm like, man, I'm about to enter this. Give me one more day, Apple. Give me one more day. I just need to make sure this 200 level, holds for this trade. In 3 days, it just takes off. There's how the chart looks. Right off of that buy level. Right? And pretty much the daily 20. Just absolutely beastly of a move. Just really in my opinion, no real entry unless you just chased it above, this 216 was really nice because that was a clearance. Rejection, 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 break above 216, gone. And it happens so quickly that I'm like, sometimes you just got to jump in. So I've got serious FOMO. Does that mean that Apple's not going to give us another chance? Never. No, there's always a pullback. So even if it grinds up to 230, even if it goes up to 235, right, it will give a pullback to a buy area. Okay. It will always give a pullback. Look at this move from 219 all the way up to 250, then a big pullback. All right. So I like Apple. If it can give a pullback to 224, 225, I mean, the RSI is just stupid on this in a short span of time. RSI at 80 on a 4-hour, RSI on 70. It does not have to stop until it gets to where it wants to go to. The next stop is really like above 230. It's going to 240. All right. So if you want to chase Apple, great. I'm just going to wait for the pullback, or I'm going to wait for a top, right, and look for a signal to short it back down. Being very mindful, it's a very strong stock, so I want to wait to the extreme top on trying to short Apple at all for short-term puts. Apple above this daily 20 and above the daily 200 above 220. So long as Apple's above 200, it's gone. Okay. Until we can get a pullback into a reasonable level. So keep Apple on your watch, extremely strong. There you go. Google finally broke above 200 with this big breakout. You can see there that rising wedge formation there, consolidating, breakout above 197.50. Google went to 202. All right. So awesome move. If you paid attention to this Google, I told Google was a sleeper, I think all year long. Even into last year, I was like, Google's sleeping. It's sleeping. It's sleeping. It's sleeping. It's sleeping. Google was that tech sleeper. Okay. So above 170 on Google just took off above that daily 20 cross right here at 170, took off, taking it 200. All right. Now, got to be mindful of where Google goes from here. As long as it's above 200, it's going to got to try to go to 206. Breaking a new all-time highs, we're going to 210. So I saw that in the chat bin that, yes, Google has the opportunity to go to 210, new all-time highs. Yes, I agree, right? So we just got to watch where it holds, where the market holds, make sure there's no fake outs, make sure Google doesn't do nothing stupid, pull all the way back down to 190. We don't know, right? But as long as Google holds up 197 to $200, right, it's above the previous highs and we're good to go. All right. So 205, 206 is the next level on Google, above those previous highs, going to 210. All right. It's just hard to find an entry on some of this stuff. For options more specifically, shares, cool, you're good to go. You still got more room to the highs. All right. Tesla, another sleeper. On Friday, we talked about, I think I posted that on Tesla. It's like, Brian, if you posted all these things, why aren't you taking them? Because sometimes the entry is just not where I wanted it. I delay. And if you delay on some of these moves, it's just off to the races. All right. So I posted in the trade ideas. I want you to look at this Tesla right here that I posted in our community on the 7th, which was Thursday afternoon. Tesla bull flagging technicals to the T, 322, break above 322, going to 330, going to 335, and headed towards 350. Okay. And look at the Tesla chart now. Same thing. There's the breakout. And again, the charts don't lie. Got to get above this 335, 340. So if Tesla can pull back a little bit, right, back to 325 maybe, retest that high, or if it stays above this 330, Tesla stays above 330, rotates to 340. If you can't do Tesla, again, this is another leveraged opportunity with TSLL. Okay. You see TSLL at a buy level. This is the leveraged version of Tesla. It's only $12. Okay. TSLL is headed back towards $15 to $16. And if Tesla breaks out back to 400, 500, whatever it decides to go to, look where TSLL was at 40 when Tesla was at all-time highs. So anywhere between $8 to $12 on TSLL, I think is a good buy opportunity for shares. Okay. For anyone in options, you already know, got to put time on it. You can do what you will with leverage versions, but I think personally, you've got from $12 to 16. That's right on that daily 20. As long as it holds that $12, headed back up towards 16. Okay. Now, I'm still cautious on Tesla personally because of, it's just based off of Elon and trading off vibes. But charts don't lie. So there's Tesla. Let's look at NVIDIA and Palantir. I've had a lot of questions, even from my mother today. I got a text like, what do I do on Palantir? I'm like, I don't know. What do you tell someone who has an average cost below $30? Hold on for dear life. Squeeze as much as you can out of it, but make sure you got your stop losses on. Make sure you understand where you don't want it to fall back below. I mean, it's just on a rocket ship. I mean, $200 is in sight on Palantir, but it's very volatile. So Palantir, when it gets to where it wants to get to, anytime there's a straight up move, there can be a very violent straight down move. See Palantir straight up. All right. We don't know where it's going. We can use technicals and, some Fibonacci extensions and whatnot, but maybe 200, maybe 190. but also it could break trend, come all the way back down to 170 to retest like that. So Palantir, I don't have a specific answer, to be honest with you. I like the trading opportunity of shorting it when it gives that opportunity, right? So for options, that means puts I'd be looking for on Palantir when it gives me that signal, right? The RSI is extremely overextended. Okay. Palantir on a daily is at 80, 4 hours, it's almost at 90. Weekly, it's up in the caution zone. And what did Palantir do last time it got up there and moved into a new high? Drastically pulled back from 125 back to $70. All right. So Palantir does have a couple of gaps back below its earnings gap, all the way back down to $60. Excuse me, 160. I'm sorry. All right. So that's kind of the move I'm looking for when it gives me the signal, is I'll be looking to, trade puts back down on Palantir for a short term and then pick up the dip whenever the opportunity comes. But Palantir, it's just a rocket ship above 160. That's where you want it to hold. All right. So it can pull back to 160. Cool. That's all I got on Palantir until it does something. It's just in a grind. Okay. So how I look at this really quick is I start marking off the previous highs that are now supports, where I see a little bit of selling coming in, pushed up into there at 180, came back down, pushed up into there, came back down. And then right here, 172, right there. Then I'll mark some like intermediate levels where I see some buyers. Okay. So these are levels that it would try to retrace back down to just based off of price action into that area. Does it bounce there? Or does it come all the way back down in this area, then bounce there? Or does it come all the way back down in this area and then bounce there? And that's just based off of looking at the charts week in, week out, turning your alerts on. Okay. All right. NVIDIA, same thing. I think NVIDIA wants to break into new highs. This consolidation just looks like a breakout trade, kind of like what Google did. So just need to watch what NVIDIA does up into here. It's kind of moving like this, grinding, breaks above 185. It's going to start squeezing probably a couple more bucks. So if we see a double top or another big rejection and break of trend, I'll look to short NVIDIA for trading opportunities. I don't really have much to say on long term, right? Just hold it. Hold it. As long as it's above this daily 20, hold it. All right. Daily 20, that blue line that I have right here, as long as it's above there, 175, hold it. Long-term shares are nothing really to talk about, but trading opportunities could have some opportunity if it does break trend, which means it will get a big red candle back down like that and then pull back like that. And then I can trade it down. Okay. But until then, just going to probably leave it alone if it doesn't show any promise and it keeps grinding. Right. Now, AMD, same type of deal. AMD getting a little bit heavy, right, is very strong. I'm not against anyone, AMD holders that bought the dip. Okay. I'm just talking about looking at what it does here. And AMD, as long as it's above this 170, that is a previous resistance turn support, and it's holding that. Okay. So AMD kind of in this bullish consolidation here from that dip buy, which was right here. Okay. Pull all the way back from earnings, had great earnings. All right. So I'd look at AMD, maybe if it can pull back to this kind of daily 20 area, maybe 168, 167. All right. If it gives just a little bit more pullback like in there, I would look at more so a bullish nature for AMD back up, kind of like that. If it breaks below that daily 20, back below 166, then we can get more selling coming in and would retest the lows, something like that. Okay, so that daily 20 is very important for the bullish nature one way or the other. All right. AVGO, another semiconductor, just very strong above the daily 20. Just let it go. Oracle sitting very close to this daily 20 area right here, which is at 250. Really interested in what it does. Again, if it holds up this, then we go higher like that. If it starts to break below, then we could get something like that. Okay. So hopefully this is making sense as far as that it doesn't matter what I'm looking at in the tech space or the semiconductor space, because most of them are very, very strong companies. Most of them have higher potential. Everyone's watching them. Everyone's looking at them. So all I'm looking at is really, is it strong and is it holding above the daily 20, at least for right now? Okay. Or is it close to it? Okay. As long as it's holding above, probably bullish movement. Right now below, here's one that's below, which is Amazon. Okay. Amazon had pretty good earnings and it dropped. Right. So look exactly what it did at the daily 20, which is pushed up into it and rejected 225. However, we know that Amazon is trying to get all the way back up to 230. So Amazon squeezes above 226, right? Then you can get that squeeze up into that gap fill. If Amazon is below 225, I'd rather wait till it gets back down to 218, 219 and show something like that. Okay. So Amazon 218 to 220 in that area, 218 to 220 on Amazon is a support. Okay. So I like it for calls to finish the gap fill. Okay. See how Amazon broke out of this? Like I said, moment ago, broke out of that with very strong volume, consolidating and trying to make the next move. So Amazon, I like for calls, especially if CPI is good. If CPI is good, Amazon will be back at 230, kind of like Apple move, the Apple move. All right. It'll be an Apple move like that. Okay. So Amazon top watch this week into the remainder of August and a little bit into September. But I want to see if Amazon can get that big move up to 230. For options, I'll probably look at the end of August, something like that. You can start looking at maybe the 230 calls, 235 calls if you want. Give it a couple of weeks. If you're a person that wants more time on Amazon, you can maybe give potentially 240 calls an opportunity, 235 calls, or just, into September 19th, right? You can look at those options. For my weekly folk, I want to stay right around this 220 to 225 area if we do any weeklies, okay? Because we know those weeklies, that theta decay, we want to make sure that Amazon is right where we want it because it can pull back, all right? So don't want to get anything 230 potentially, unless it's a lotto or unless we see it moving. It could get to 230 this week, okay? So Amazon with good CPI could get to 230 this week. But just for safety, maybe want to give it a little bit more time. Okay. Getting a little bit over time here, so I apologize. Robinhood, I'm touching on some of the big ones. I've got another long-term play that you should look at for shares and long-term leaps, which is TTD. But let's keep looking at Robinhood here. Assess with crypto moving. Robinhood got a little bit of stalling going on at 117, but still above this daily 20, which is at 105. So again, anytime there's grinding like this, if you're in Leverage University, you know that I like trying to find a top on it, right? Because people will profit take and trap maybe up into 120. And if I can get something like that, that'd be awesome. Maybe a pullback into 110. So I'll look out for it, but don't really want to, trade against a very strong stock until you have confirmation. Okay. So Robinhood, very, very strong, broken into new all-time highs above this 112, 113, and trying to get to that 120 level. Okay. So maybe I'll pay attention to Robinhood, at 120, or if it pulls back drastically enough that I like the call options, then, Robinhood calls until 120. Calls until 120. SoFi, I don't really like that chart right now. MP, Shopify still has a big gap from earnings. So maybe if Shopify can retest the highs and get a double top at 150 or something. All right. It's just consolidating what it does here. If it can do something like that. All right. All right. Here is one of my last that I like for, a bigger play. There'll be, just, in my opinion, easy money will be ARM. Okay. In the semiconductor sector, ARM has a nice falling wedge here. You see this big falling wedge. It's kind of like that MU play that we talked about last week. So ARM, if it starts breaking above here, gets out of here, it's like that Amazon. It's going to go quickly to 150. All right. So ARM, and it's got a gap fill above. I like ARM a lot personally. If it can start giving me a little bit more confirmation, or if we can get an early entry right here, it's right off that daily 200 as well. So ARM, big play coming up here. This is kind of like my Apple that I mentioned that I missed out on. This is kind of like the Amazon that some of y'all missed out on. But this play is coming up pretty quickly where ARM will be back to 160 in no time. So still want to keep stop losses on, but I've been looking at like the October contracts potentially. In the shorter time, maybe it's, a little bit cheaper for some or more affordable to look at the September 19th. So that gives about a month for ARM to get back up to 150. Maybe this 160 could work out pretty well, around $200, right? Gets back to 160 in a month. So I like this move here in the short term. Maybe next week's still pricey there, in my opinion. You might as well give it time. This week, those could move pretty drastically as well. So we could day trade it with weeklies, but I'd probably stay around the 140. If it breaks above 140, those could move. You see the 145s could move as well. So anywhere between 140 to 145 if you do weekly contracts, in my opinion, just to keep it safe. All right. But ARM ready to make a big move there, in my opinion, once it breaks above that 140 level right there. Cool. All right. Beautiful. Trade desk still waiting to hit low 40s. Yes. Trade desk. I think that's easy money as well. There's no reason other than scarcity for this to drop that far on TTD. Okay. So another big share opportunity for this to be an easy double up, right? Maybe even, just 50% on your money. Okay. So you take it from 50 to 75, right? 50 to 75 is very much possible on TTD with this big gap fill here. And it's fairly inexpensive for, in my opinion, some January contracts, right? On TTD. So look out for that. Shares. If you want to short-term trade it, I would say probably October 17th will be the shortest I would go, unless it just gets moving pretty drastically. I mean, should have done a lotto on this. Look at these contracts. 1,000% on your money. 1,000% on your money. 2,000%. I think those contracts, those 60 puts for earnings were $20. So you earned $20 into $700. Right. So same thing can happen back on the upside. So look out for TTD. All right. That was a mouthful. Give me a 1 in the chat if this was good for you, right? If there's any improvement, I'd love to hear that as well. But if you notice the tone of today's Stock Sermon Sunday was more so based on what is going to happen, Brian, like what can I invest into or look into or do my due diligence on for the next 2 to 3 months, right? Maybe I can't day trade. Kids are going back. Work's getting busy. We're coming up into the end of Q3, into Q4. I got holidays coming up. I don't want to have a lot of risk on. What can I maybe put some money towards that it's a leap, a long dated option contract, some shares, and you can take it out further and have a good rest of the year. Does that help everybody? Serve everybody? Hopefully it does. Some capacity. Because all the tech stocks, right? Those have made their move, in my opinion. They may have a little bit higher to go, but we're going to maybe see a little bit of rotation and some money, a little bit of profit taking, and then they'll decide where to pull it back to and buy it up. All right. So these are the times where I look for beaten down stocks, things that have opportunity on the upside, especially if there's minimal more upside on a lot of these tech stocks in the short term. Okay. In the short term. All right, folks. Peace, love, and blessings to you. Thank y'all so much for the extended time. I do apologize. I want to respect your time, especially on the East Coast here in the United States, and then Central Standard Time as well. Peace, love, and blessings to you. Until the next time, I will see you this week. Tomorrow we have no data, right? It's a Monday, so I'm going to be very cautious as I always do on a Monday because last week was a little shaky. We want to get started off on a good trading week for Monday, so I will be live trading tomorrow inside the Discord. Would love to have you in there. 3-day trial. If you make money in the first 3 days, then it's worth it, right? So would love to have you in there and go from there. Having a long-term and a short-term works. Exactly. Short-term day trading, very minimal risk, right, Marlon? Right? Make some short-term good money, put it in your bank account, whatever. Reinvest in some stocks and shares, and then also have that long-term outlook as well, and don't dismiss that. All right. Talk to y'all soon. Have a great rest of your Sunday, and have a great and